Hello guys, welcome to the train part. We really need to sit down and have a serious conversation. On one hand, we have empty gox deposits skyrocketing, which is triggering one of the most bearish signals that is telling us that a big pullback might be on the horizon. But on the other side, we have one of the strongest bullish signals coming from the hash rebounds telling us the capitulation is completed. On the daily time frame, things are looking promising, and even the 4-hour might signal continuation very soon. But we have to address as well the elephant in the room, which is this weekly candle that we have in progress that is causing us loads of worries. People on Twitter approaching me and asking me what's really going on in that sense. Guys, if this is the type of content that you like to watch, make sure that you're subscribed to the channel. Hit that notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, watch this video until the very end. And do not go anywhere without leaving a comment down below. Those two things are telling YouTube algorithm that this content is worth watching by more people. And I would really appreciate if you can send that sign straight into YouTube. Thanks so much for that. I'm going to approach things from low time frame to higher time frame, meaning that the first things I'm going to show you might look bullish, but those are going to be things for the 4-hour time frame. For example, after this uptrend that we have on the 4-hour that made the price go from 53,000 all the way to 68,000. Right now, it has lost the momentum on the 7th of July. And even though since then it made a lower high here, the price made a higher high, and that printed a bearish divergence. And since then, it's been pretty much back into the CPR pivots, which is where we are right now. But looking at the pattern of the breakout, even on the 4-hour, it still doesn't tell me that we are fully done. In fact, we are kind of holding this support at the moment at 64K. I think the real carnage starts if we lose the CPR pivots. The last one is located at 63.5. And right after that, we could get a nice trip to the next area of support located at 57K. That is doable for the price. Remember that every time the price travels between this area and this area, it does it in an impulsive way. Example, here it went from 63, 5, 10K lower in just a few candles. And then after finding support on this area of the CPR, it made a move of 16% back. So this area in here, price moved really fast. So all eyes on this support when it comes to the 4-hour. If we hold the support, we might have potentially some sort of dead cat bounce. Very careful with seeing a dead cat bounce that hits this area of liquidity with a rejection back to where we came from, because that completes the head and shoulder and sends us back to the bottom. That is one way of getting there. Of course, you could also lose support straight away and also go there if there's some bullish catalyst around the corner and still print a high, because technically we haven't broken this low yet. And that is the last nail in the coffin to fully break the structure on the 4-hour, at least when it comes to the price. When it comes to the RSI, the momentum has been already fully lost. In fact, we are getting to the lows of the 30s already. What I'm looking for on the 4-hour is a breakout above the dotted trend line. That might signify a reversal. Now careful, because this reversal is running against the weekly, running against the daily trend, and on both of those time frames, we are seeing some things slightly worrying. We're more of that in just a second. I would like to see the RSI break above 38 and hold there for a potential dead cat bounce towards 56. Currently 38 is located at 64.5. So if we manage to get above that and close a 4-hour candle above 64.5, we could make it to 56, which is currently located at 66.7. And that's precisely the area where we have another order block that could complete the head and shoulders. Hopefully, when we approach this area, we manage to make it to 68, because that will flip things once again for potential continuation above these highs. On the daily, things look a little bit of a mixed bag here. And I'm going to tell you why. This breakout here was very impulsive. And yes, we did a higher high and a higher low with this last move. But now we have broken the structure, putting a low. We are waiting to see what's going to be the next high. But I will suspect that if right now we had a high, that will have a hard time making a high above 68, just because here we have lost momentum. Anything can happen. And on the positive side, even though we have broken this trend line, since on the 14th of July, we broke above this major trend line, which is more important than the dotted line in yellow that we have here, which is only a local one, the whole structure in front of your screen looks as a breakout and coming back for a retest. That is as long we don't close below the white line in here. If we go back below an RSI of 49 on the daily, it means that we're going back into the previous range and that this whole breakout was just a massive fake out. We need to wait and see if we hold RSI 49 on the daily. RSI 49 on the daily is currently located at 63.1. Not a big surprise, because 63.1 will mean that we need to print a lower low relative to the previous low. That's very interesting, because that means that we don't necessarily need to break below this trend line on the daily price. We just need to go below 63K, pretty much. Remember that every time we talk about prices, we talk about the closing price and not necessarily a wick. The price can go even to 60K, but as long as on the daily we close above 63.1, that will ensure that the RSI closes above this trend line and that investors watching this are going to perceive it as a retest of this breakout. One of the signals that has me worried the most is the Big Whale Explorer. This indicator is telling us that there is double the amount of large holders currently depositing in exchanges compared to withdrawing. And we are getting to an area of 2.06. That is even higher than the 2.14 that we have at the all-time high. And if you go back in time, you're going to see that this indicator shouldn't be used necessarily always like I did here as a top of the market signal. When I decided to sell at 73K, my decision didn't only come from this indicator. I use it in confluence with many more signals. But it's good to know when large holders are depositing. As you can see on this deposit there, they ended up selling, pushing the price 40% down after that. Yes, that wasn't the peak of the market, but whales never sell the top of the market. Whales start selling way beforehand. For example, in here, they deposit just at that bottom and they end up distributing throughout this period. Then on this large deposit of the previous bull market, it occurred on this leg right after breaking 20K. They were preparing to sell. So we don't know these deposits that occur here when they actually did the distribution, but I suspect that big part of that occurred on this pullback of 33%, and the remaining part that they distributed was across 100 days of sideways price action like here. If you focus at the big picture here, it's very clear to me that this was the largest peak during the bull market of selling. And what worries me is how many times we are getting to ratios of 2 around this area. It almost feels like it's happening a lot more than in the previous bull markets. And yes, I understand that this was because they were thinking that probably we got too overextended, very close over an all-time high. But this last high that we are having here definitely has to do with the distribution from empty GOX. If we don't see the price dumping that hard and at the same time we saw the ratio going back into this area, it will mean that most likely all the creditors decided to hold it. I hear lots of tweets from influencers saying, can you see? They are not selling. In fact, there's a lot of withdrawals. Just looking at this indicator, I see many more deposits than withdrawals, and I don't think they are withdrawing in such a big amounts to start feeling that they are actually not gonna sell enough to cause any damage. You can see that we are on Thursday, approaching little by little the end of this week, and we are halfway through on the bull market support band. And as I mentioned, I have two most likely outcomes. Do not expect them to happen in any way very similar. This is pure speculation, but one of the outcomes I'm expecting is potentially that this sell-off gets bought up back above the market bull support band and potentially retests once again above it, and that will signal that there is a high likelihood that we break out finally above the megaphone. That is kind of the most bullish and shortest way to get into an all-time high. But if empty GOG's distribution starts having a significant impact and we break below the 64 and the 63 that I mentioned earlier in the video, it's quite likely that we're going to go below the bull market support band, retest it, and aim for a new low. That will still keep the megaphone pattern that we have been talking about for many months, with an emphasis on how history rhymes on every cycle, printing a megaphone pattern like this one here, and that one there, all of them leading into the next and final leg up of the bull market. And let's address the signal from yesterday. I know many of you got excited with the buy signal from the daily and with the early weekly not yet settled signal. What I saw this morning is that the MAs were pointing once again at each other for a potential bearish cross. What will happen if after a buy signal we get once again a capitulation like this one here and that one there? I think if we were to lose 64K, it could happen that we get a new capitulation followed by a second buy signal. When we look at the weekly time frame, you can see clearly here that the buy signal that we had yesterday is now gone, and that is a consequence of the price coming lower than yesterday. This is a signal that needs the weekly candle to close to stay in the chart. So by Sunday, depending on how low we go in the price and depending on the hash rate that is being monitored by this indicator, whether we are going to consolidate or delay to later the actual weekly buy signal. Now, going back into the daily and going back in time, I'm going to focus on this area in 2015. In this case, we had a capitulation on the 17th of May, but right after that, we have new capitulation on the 19th of May. The whole process of printing a new buy took around 2 weeks and the price continued going down, but not that much. Actually, it did a sideways of 3%, and on the last buy signal, it finally did the last drawdown with a total of 9% before making a move of 30% to the upside. So the daily can do these fake outs is way less accurate than the weekly. And that's why I've been insisting every time I make a video about the hash ribbons, I talk about the weekly being my preferred time frame for this signal. I use it just to poke on my shoulder and to tell me, hey, pay attention. That capitulation is getting very close. On the daily, I still consider it a strong signal. It's got over 90% of accuracy, promising upside, but that doesn't come necessarily without any drawdown. Very important that we cover the weekly as it's progressing. So far, we are seeing a rejection on the dotted yellow line. So this, if we were to close Sunday, this will be quite bearish. But as I mentioned, the worst scenario is to break below 45. That means that we are putting a lower low. It signals that things are not going to be as easy as we expect them to be. We have already closed multiple candles below, and the best scenario was always going to be to recover this as support. And the ultimately best scenario ever is to break above this trend line straight away. That is the path to the fastest recovery. Now, since we are here, let's assume that we close below here. What will be a path for a potential recovery, even having lost the full bull market trendline support? That will be if we come to this area around here, above, hopefully above 50, and on the upcoming weeks, we broke out above the trend line. That could give us some momentum to push towards the 60s. It will be pretty difficult on this angle to break above this and hold it like that. It's extremely rare, but I'm prepared to be surprised by Bitcoin. I have to tell you that after being at these levels of 50, having this trend line coming up here, it's gonna tend to be a strong level of resistance. We must continue to monitor the weekly. Most of the answers of what's to come for the remaining of the year and even early 2025 is going to be all written across this particular chart. The levels that I flagged on the RSI were 45 for this area here, followed by 59, which is precisely where we are being rejected. And the last one is 70, which is just at the momentum where we had the last sold off. And that is a conservative target if we were to break above the trend line. So we got a target for potential bullishness if we break above the trend line. Then we have the support that is holding us, that we need to break above it. And then we have the 45, which is the last line in the sand. We don't want to put a lower low there because that could put very close a potential fail cycle. And I don't want to mention that ever again this year. Hopefully I don't need to. That's currently located at 54.6. So no weekly closes below 54.6. That's forbidden. To turn bullish, we need to close above 67.8. That sounds really difficult, but pretty much that means that we need to close above the last week high. And that makes a lot of sense. That will put things ready to push for new highs. And the RSI 70 is located almost at 85K. So that is the reward that we are talking about if we were to close above that 67.8. Pretty significant. If we were to do that bullish move, that will coincide with the momentum that we're getting from the stochastic bullish cross RSI that we have, I think, a week ago. Let's have a look at the order book for volume below and above the price, just to identify what is the incentive for the price to start moving. The price has been going sideways here on the 5-minute time frame for quite a while. We already took this liquidity, and I think the most attractive level now for the low time frame moves is located from 62 to 62.3. I think it's quite likely that if we break this support of 64K, that we go next for that level just because it's packed with liquidity. Let's look at the upside, and the upside is quite far at the moment from the price and way less significant than what we have at the 62 level. In fact, we need to get to 68.5 to start taking some significant liquidity. And yes, it's more than the one that we have below, but it's so far from the price, and at the moment we have lost most of the time frames. If we go into the swing template, you can see that obviously the most packed levels are at both ends. We can see that the liquidity is concentrated from 68.5 to 69. That's the most significant on the hour relative to anything that we have here below. So we might argue that there is huge incentive to push the price high, but my guess is that it won't happen until investors feel more confidence against all this that's currently going on. They are really spooking all the investors at the moment. And the performance of the SPX and the Nasdaq, not just with those indexes, but also with the VIX and big techs, really looking ugly today. I hope you've been paying attention. I started calling for a top of the S&P since the day that Nvidia printed this candle on the 20th of June. Since then, it's been pretty much a process of seeing everything topping out from that day. And it doesn't surprise me because Nvidia was responsible for dragging everything up. And if Nvidia is going lower, it can easily also drag everything low, even if there's rotation into lower cap going on at the moment. By the way, follow me on Twitter. I'm keeping you updated with the developments of everything, including the hash ribbons, on the daily time frame, and even on the 4-hour, I'm keeping you up to date. Yesterday, I also shared the performance of my real money bots running on Ganium. I left you a 36% discount on my tweet, one of the bots with very similar settings to the ones I like to use. Some things are surprising me, like for example, Russia passing a bill allowing crypto for international trade. That's pretty bullish. Or the SEC pulling back against their actions with Binance. It could be that US maybe is confirming with actions that they are taking a U-turn when it comes to crypto, and harassing every single crypto company might very soon become a thing of the past, at least in US. And although the new potential candidate Kamala Harris is saying that Bitcoin is money for criminals, and she refused to participate in the conference, I don't know how much of this is just speculation or if it's confirmed, but if she has this sort of perspective, that's not a great thing necessarily. I would like to double check these facts because just a few days ago they were saying that she is approaching people to learn more about crypto. So it feels a bit like social media is trying to manipulate us with this sort of news in both directions at different times. And yeah, after the ETF approval, even if there has been inflows, the market has still seen some pullback. Everybody wanted to think that just because it's going live, we're gonna go higher. But as I mentioned in many videos, neither Bitcoin went straight higher. At the moment, the BTC spot ETF went live. This is a very interesting perspective from Mr. Crypto. You can see that every time that we have a bull flag pointing down, we go higher, and when it points up, we go lower. And so far, it's been 2 bull markets where this pattern is respected consistently. So the question is this bull flag going to be any different? BlackRock's Bitcoin ETF has had more inflows this year than the Nasdaq, tracking QQQ ETF. Just by a slight difference, but it's very impressive to see. And yesterday, people were talking about the repayments of empty GOX and how that is still not impacting the price. After 10 years of having lost their Bitcoin, there must be a big portion of them that maybe are not even anymore into crypto. Maybe some of them got burned by this and they stopped doing crypto. So expecting that they receive their Bitcoin and they sell it straight away, I think is the wrong approach. It might be a slow bleeding in terms of selling, potentially like in the shape of a snowball effect, like maybe a few start selling little and then that creates an incentive for the rest to start selling. As they see that the price collapses, many more sell, and eventually we could see a capitulation from empty GOX. One of the indicators I'm looking into is the SOPR, which tells me how many coins are being sold at a loss. Typically, that signifies the local bottoms during the bull market. So if we were to get a signal, this is one of my VIP indicators, I will let you know on Twitter. If you want to have access to this indicator, you need to join my community as a VIP member. And by the way, I'm running a position airdrop of Bybit for $500. You trade with 100 and they give you 500 additional so you can trade. There's a link at the top of the description with all the instructions to do that. And if you use my referral link to sign up, you can claim up to 30,000 in rewards. If you're using my referral, then provide your Bybit UID on my Discord server to validate your referral and then claim 70% of all subscriptions on my website. You can if you already have a Bybit account and you're happy using it, you can transfer to my referral link so you can still get the big discounts to trade on Bybit from pretty much anywhere in the world. I left you a video with instructions and also a discount to get the card. Guys, thanks so much for watching. Remember to hit the like and leave a comment down below. I'll see you on the next one. Bye bye.